Hello traders out there in Traderland. My name's Dez here at Grok Trade, and this is the weekend edition. And this weekend edition is good through Sunday, July 14th, 2013. And the markets end fairly bullish on Friday, closing out the week. And for the week, nice rally in the markets overall. Large part had to do with Mr. Ben Bernanke coming out saying he's going to keep the pedal to the metal on the buying program on the bonds, keeping the QE3 well and alive. However, the PPI came out and it did tick higher, giving us higher indications of inflation. With that will cause Ben Bernanke to want to come in and say maybe we could start letting up off the pedal and start taking away some of the stimulus. And as soon as we get word of any of that happening, we should see the markets react to that in a very negative fashion and form. Take a look here at the S&P daily. An extended run, a big bullish symmetrical triangle breakout over all major moving averages. This thing has been on a tear. The problem with jumping in long right now, the problem with that is we're too extended. So the markets are overextended on the daily charts. What we're looking for is some sort of retracement, some sort of pullback to give all of us a chance to reload a bunch of longs. So with that, be very careful entering long. Certainly do not be looking to go bearish in this market because any sort of pullback might be short-lived. Just keep your eyes on that. And look at the weekly chart. Weekly chart cleared this previous swing high. That we do have the 1687 area, which was a all-time high on the S&P 500, and we are nearing that right now. So that's a number you'll want to write down, 1687. If you guys remember way back, I said anything over 1620. Remember this back here, 1620. If it goes over 1620, go long the market. I hope you did so because we nailed it. On the monthly chart, boom, heading straight up well over the 1600 mark, coming up, knocking at the door at 1700. Gang, that 1700 could be a nasty little area of resistance, so be watching that. Now let's go to the NASDAQ. NASDAQ monthly. We are releasing off this floor. This was problematic. What you'll see here, we hit ceiling, floor, we missed the ceiling, and all we did was start hugging the floor. This was a great opportunity to see this break down. We talked about it, I warned you. However, because of the stimulus, the QE3, that massive buying program is taking place on the bond side, that's keeping this market afloat and running higher. And here we're stuck. You'll see we closed this 3600 area on the NASDAQ. Huge area, could be resistance right here at 3600. Big boom to the upside. But I'm thinking this thing could climb higher and maybe get up here around the 3663, 65 area. On the daily chart, I drew a trend line in here, and if you'll notice this trend line looks like it's drawn incorrectly. And I'm here to tell you we are quite advanced on how we draw our trend lines, quite scientific, and this is spot on. That's why it gets challenged so many times here, and we're watching this like a hawk. So you have NASDAQ blowing 13-year highs right now, doing exceptionally well. And I want to take a look here at gold. Gold had gapped up the latter part of the week, and we're staying above the 20-day moving average. If we build a high base here, there is a chance that we could have some buyers come into here, but there's a lot of gaps here, and this major gap that will fill should act as resistance at 130. On the weekly chart, you'll see we're just starting to make a bounce, higher high, higher low. This is a pivot candle only. We need a breakout to ensue. On the monthly chart, we have this little bullish harami just getting started here in the lower half. Nothing to get too excited about, but this is a major area of support, and we're staying above this 120. As long as we can stay above 120, that would be a pretty bullish thing. Now silver on the monthly chart is at a major area of support, looking much like gold. This could be a bottom for precious metals. You're hearing it from me here at Grok Trade. Here's the weekly chart. We broke below a support area, but we're just starting to come back above it. This thing looks like it's wanting to run, but there's no volume on precious metals right now on the bull side. So that's a problem. On the daily, popped up here, hanging up on the 20-day moving average. Taking a look here at the banks here on the daily chart, big high base. As long as we can high base and break out, the market should stay strong. We're above all major moving averages, looking very, very strong. Banks on the weekly heading higher with a little bit of a stall, and then the weekly chart, you'll see this. We had this rising, or monthly chart rather, we had this rising wedge, but it broke out of it the last couple months, and it's leaving these moving averages behind. We never did go into the sell category. We are staying very bullish here. And I want to look at Google. On the monthly chart is at 923, gang. Big, but that's a resistance point. You can see that coming across on the monthly chart. On the weekly chart right here, you can see it coming across. That's a big resistance area. We need to blast through there. We do have volume. Google's looking really hot. Nice extension out of this bullish pennant, looking for a pullback for an entry opportunity. And for all you Apple freaks out there, we're at resistance, gang. Resistance. We tagged resistance on Friday, pulled back from that. Now we have what's called a bearish thrusting pattern, almost a spinning top type reversal pattern at resistance. Be very, very careful with Apple. This thing could explode on you. On the weekly chart on this though, the weekly is awesome. What I love about the weekly is we have a confirmed breakout of this falling wedge. This could be a low for Apple, and this could be an opportunity to buy Apple. But again, it has to break over this trend line on the daily. The daily has to penetrate this before this weekly is going to make me feel good about entering a long-term position on Apple. On the monthly, it's looking bad, but we're at such big support area. This could be the low, and we're finding a lot of support stay above 400, and this thing could start to chop northbound, give us a lot of great opportunities. For all you Facebook fans out there, something I want to point out on the weekly chart, check this out. I gotta redraw this line. Resistance, we're right at resistance. I would not want to buy this unless we could break out of it. This is a weekly chart. Monthly chart, we're just coiling. The daily chart, we popped up here finding resistance at the 100-day moving average, so not too bad. And I'll end on this. This is a one stock off of our bull list, and let me explain what that means. I'm going to actually walk through a trade with you. We'll go back a little bit here, and we do have a product called the Stock Pixie newsletter. Let's just we have bullish stocks and bearish stocks. What's the difference between them? The bullish stocks, we have over 16 metrics that we're looking at that have to, these stocks have to be the who's who, and they have to be the best stocks. And we go through a lot of education in our mentorship to show how to pick these, but this is one of them, and I want to just talk this through. There's no trade here, so I'm going to move it up one. The question is, this is FDO, daily chart, is this a trade? Would you enter now? Would you enter now? Would you enter now? Would you enter now? Where would you enter? I'm telling you right now, this is the entry candle. This candle was an entry. All the Grok graduates understand why, because they know how to draw trend lines, support and resistance lines, know how to read volume versus price action, and also know how to look at the very important indicators and oscillators that we incorporate. So with this, I'll bring in the MACD. So this was an entry candle. There were no other entry candles here. They could have blown up on us. So this is the entry candle. And that's where we're at right now. And here we're looking to preserve profits, taking some off the table, and maybe increasing and moving up our protection to stop out of this if things start to get hairy. So a couple things here. This is kind of a teaching moment. The question is, did you know when to enter? Well, first, do you know exactly what stocks you should and should not be in, how to pick these winners? probably problematic for most, I would say upwards of 85 to 95% of you, because you're not formally educated yet. And do you know where to enter the trade? So again, this was your entry candle, and we're still in the trade, and we're preserving profits on FDO with some different strategic strategies that we do teach. So a lot of the problems that we see with students is, one, they don't know how to pick the stocks. They don't know how to find proper companies and the best ones to be in. Second, they don't know exactly when to get into them to increase their probabilities. Or thirdly, how to exit to maximize profits. If you want us to mentor you, be happy to do it next weekend. Anyway, listen to the next few videos. I think you'll enjoy them.
I'm Tim Cole.
I'm Mike Reed.
My name is Randeep Kapoor.
Shane Parker.
Hi, I'm Steve Gould.
Mary Olson.
My name is Spiro Karajanis.
Mike Muller.
My name is Caroline Elizon, and I've been day trading full-time for about 2.5 years.
What did you think of the mentorship?
I am just thrilled with it. I think it's a great program.
It kept me going, kept my brain moving.
In 20 years, I learned this much about trading. I think that this weekend gave me this much to add on it.
This is actually my second time through mentorship, so this is a refresher for me. And I'm picking up nuggets that I missed the first time around, and I feel more confident to use all this information.
It's given me a skill level that's a much higher level.
You learn stuff that you will not learn in any other course. I've taken a bunch of different courses. I've never seen this stuff taught before. No one else teaches it. I mean, you've given us such golden nuggets today, or this week. You know, it's well worth taking this class.
It has helped unbelievably. I mean, I can't even explain it. I'm literally at a loss for words right now.
So if there was someone out there who was thinking about joining the mentoring class, kind of on the fence, what would you tell them?
I would definitely say this is something that you need if you're struggling with consistency in your trading results.
You need to have good education, good understanding, otherwise you will get killed in the market.
You can understand why they're doing what they're doing, how to trade successfully, how to make the proper setups, what you're looking for, and how to go from being a newbie to a professional trader in a short period of time.
You're not going to be able, on your own, floundering or just reading books, to be able to sit down and pick the brain of very successful traders and be able to incorporate that into your own trading.
You learn something that you didn't know before, and learning is always good, no matter how old you are.
Mentoring is all about helping you really get your hands on and practice it.
I would tell anybody who's on the fence, it took me 20 years to learn this much. This much. And you know what? Maybe it's really this much, but I'm trying to, tell you that I know a little bit more. And I got this much, out of this weekend. So I think you got to be crazy to want to go through years of heartache to learn stuff that experts can teach you right away.
I've just realized being here how important it is to get some formal education in trading. You get so many things from so many different directions, and to have it all brought together and put in front of you, your toolkit so you can use it, is really invaluable.